This week's trends were full of small regressions. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, October 4th. We know that selling or buying a home can be very stressful and confusing. That's why we do these weekly videos, so you can know how the market is impacting your options as a home buyer or seller. As always, we start off by looking at how the market performed this week. There are the same number of homes this week on the market as last week, with an average asking price around the same at $2,217,000, up slightly from the average asking of $2,190,000 last week. 4 homes went pending, much less than the 11 we saw last week, with an average asking price on those pending homes of $1,812,000, down slightly from the average asking of $1,833,000 last week. And 8 homes sold this week, more than the 5 we had last week, and the average sales price jumped back up a little bit from $1,622,000 last week up to $1,750,000 this week. So, now that we know how the market performed this week, what we'd like to do next is look at the broader trends that help tell us where the market might be moving. Before we do that, if you do find this information helpful, you can hit the subscribe button down below and might as well share it with a friend as well. Everyone deserves to be in the know about their local real estate market. Okay, so now we can look at those broader trends and what they're telling us about where the market might be heading. Starting with inventory. It continued to drop at the beginning of the week, but immediately jumped back up to the same number that we had last week, 35 homes. There are more homes listed as coming soon now than there have been in the recent months as well, so this inventory number could continue to increase in the coming weeks. With that increase, the inventory dipped down again. With the inventory dipping down, we saw the turnover rate jump back up and then come back down again as well. It did reach above that 100% mark just briefly, but then, like the inventory jumping back to the same level of last week, the turnover rate dipped to just about the same as we saw last week as well. With the turnover rate remaining below 100%, it's no surprise to see that the over-under number continues to drop also. It had a steep decline a couple of weeks ago and now continues to just kind of slowly drop off a little more. We are now seeing homes sell for about 1% less than their asking price on average. This stat will continue to drop over the next few weeks, regardless of how inventory and turnover statistics go, since this is a lagging indicator. But it will recover quicker as homeowners start making their price adjustments prior to going onto the market, assuming that they do. The current on-market homes should give sellers a better understanding of how to price their homes to be attractive to buyers. The average sales price statistic has settled in that $1.7 to $1.8 million range for the past few weeks. This trend continues to support the idea that the smaller and more affordable homes are still selling in San Ramon, while the higher price $2 million plus homes are struggling to gain attention from buyers. The steep drop in average prices doesn't tell the whole story, but it does give the market the reality check that smart pricing strategies are more important now than they have been in a very long time. Tech stock equities stalled out this week. It looks a little flat here. They actually dropped about 1% this week. This dip in value comes in a week when there was a large amount of negative national and world events. Natural disasters in the south, port strikes on the east coast, and increasing tensions abroad can cause the economy to slow down. We will see if that negativity continues to affect the market next week, or if it was a temporary reaction to what seemed like an exceptionally negative news cycle this week. And the interest rates did come back up a little this week, increasing by 4 basis points. Really not much, but after several weeks of decline, it's a bummer to see them coming back up again. Just like the equities market, I think it's likely that this was a lot of economic headwinds this week, with natural disasters and the longshoremen strikes threatening to disrupt the supply chain. Even with all the negative news this week, interest rates only jumped up a tiny bit, but they are still as low as they have been since February of last year, which is right around there. This week's trends were full of small regressions. After a decent amount of hopeful recovery that we had last update, this week took the wind out of the sails. With the shipping labor strikes and Hurricane Helene wreaking havoc on the East Coast and instability growing around the globe, it isn't too surprising to see that the market has slowed back down a little this week. The good news is that San Ramon remains an area that attracts a lot of interest from home buyers looking for safe communities with good schools. But it continues to be very important for sellers to be very intentional about how they prepare and price their home for the market. Thanks for joining me for this weekly update. I hope it helps you understand how our market is impacting your options. Don't forget to hit the subscribe button and ring the notification bell so that you can stay informed on how this market continues to shape up as we move into the fall season. And if you have any questions about how you can navigate the stressful and confusing process of selling or buying a home, leave a comment down below or reach out to us directly. We're here to help guide you every step of the way. Have a safe weekend, and I'll see you next week with a new update.